Good morning and welcome to day 2 of the Account for Your Future conference. Hopefully you all enjoyed yesterday and got a lot of pointers from the presentations from Brian and Steve, and I'm sure today is going to be the equal of yesterday. So today's agenda is that we have Richard, who is the co-founder of Account for Your Future. He's going to deliver the first presentation, and then we're followed at 10 o'clock, by Alexandra Bond-Burnett, who's going to be talking about culture. And then from 11:10, we have Lucy. So Alex will talk till 11, and then we'll have a bit of a tea break, stretch of the legs, and then kick off again at 11:10 and run through till circa 12, 12:15. So we'll see how we get on. Before we start, just a quick word for our sponsors, who are Moneypenny, who do the call answering and chatbot service. We have CPD Store, delivered by the wonderful Zoe, and Tax on Demand, which is a brand new service which will be launching in the UK in approximately 4 to 6 weeks' time. And again, I should say it's Louise from Moneypenny if you wish to get further details on those particular sponsors, and we do deeply thank them for their help in putting the show on. So without further ado, I would like to hand across to Richard, and I'm going to look forward to the next 60 minutes. Richard, the floor is yours.
Thank you, Dermot. Good morning, everybody. Great to have you with us. Let me start by sharing my screen. So hopefully you can see that.
Yes, we can.
Good.
Yep.
So yesterday we had 2 fantastic sessions. Brian Coventry talked to us about the envision process for change within your firms, based around technology, but the link with mindset was just such a critical part of that. And of course, we had the inspiring Steve Cunningham on, who just proved to all of us, each and every one of us, that the world is what we make it, and certainly our own lives are what we make it. So rather than just sitting down there and bemoaning our bad luck and the fact that we don't have these perfect lives, you wake up every morning and you get on with the life that you have in front of you. So it was an inspirational day yesterday. And what I want to do this morning is to really pick up on the 2 elements of that link together. We talk in the profession an awful lot about our teams, about our clients, about our systems and processes. We talk quite rightly about the need to focus on all of those. We talk quite rightly about the need to focus on our clients and put them front and center of our firm. We talk about, quite rightly about the need to engage with our teams and the value of our teams. One person we don't talk an awful lot about is yourself. And that's what I want to focus on here. I want to talk, as you can see there, about why you matter. Now, don't be concerned. This is not me going to start jabbing a finger at you and saying about how you've got to do better and how you can work harder and all the rest of it. Those of you who know me will know that I'm the last person to sound off about working harder. Working harder is never a long-term solution. What I want to talk about here is the impact that you have upon your firm and how ultimately the person who can make your firm better is you, but not necessarily in the way that you think, not necessarily by just you coming in earlier and leaving later and leading by example. And I want to talk about 3 different aspects of you. I want to talk about your vision, the vision that you have for your firm, and very much in its widest sense. I want to talk about what I call your rules. In other words, I want to talk about how you set the behavior as much as anything else and the criteria for your firm. And then I do want to touch on your responsibility as a leader in your business, as a leader of your accounting firm. But this is about making sure that you are fundamentally happy with what's going on around you. I talk an awful lot about the emotional side of running an accounting firm. I've been in the profession for 41 years now. I'd love to say I started very, very young, but I didn't start any younger than any of the rest of you. But I've been around for 41 years, and since 1993, I've been running my own firms, starting the last one in 2009. and subsequently working with other firms of accountants. But I know the sort of the practical challenges of running an accounting firm inside out. If there's a mistake to be made, then you can guarantee that I've made it over the years. And that's something that I look to bring to other accountants again now. But there was a very, very fundamental lesson that I learned through that journey. Learned probably later than I would have wanted to, but that was the fact that we sacrifice ourselves as accountants. We sacrifice ourselves for our clients, for our team members, for our systems and processes. We find that if there is a point that gives in the firm, then inevitably we are the ones who are backing down on that. Now, we do that for all the right reasons. You know, people think that accountants are all about the numbers, all about the money. We come into accountancy because we're good at maths. That's the vision, the view that people have as accountants. And yet, for the vast majority of accountants that I've come across over the years, certainly those who I work with now, it's not that at all. For many, we became accountants because we wanted to make a difference. We wanted to help other people. We want to help our clients. We want to help our families. We want to help our teams to develop. We are very outward looking from that point of view. Unfortunately, in doing that, we've cost ourselves time and we've cost ourselves money, because we've allowed our desire to help other people to actually get in the way of sometimes doing things that are actually right for us. And we see that when we know that we talk all the time about we give too much time away for nothing, we give too much advice away for nothing, we work silly hours, we constantly bail clients out when they're up against the deadline, when they've not done what we asked them to do. And we do that for the right reasons, because we know that they've got a problem, we know that they're short of cash, we know that they've got lots of work pressures on, but we've done ourselves no favors at all. And one thing that I learned, certainly with the last firm, the best firm that we had, the most enjoyable firm we had, was that if you put yourself front and center of your firm, then actually you very quickly get yourself in a position to address those sort of things. And actually, it's okay to put yourself front and central because it's your firm. And that sense of guilt that we have, that actually it shouldn't be about us, it should be about everybody else, is something that we very quickly need to get over. And actually, when you get over it, you realize that not only do you get a more satisfaction, more reward out of your firm, but actually everybody else does as well. So that's very much what I want to talk about today, about putting you front and center of your firm and not feeling guilty about it. So the most common emotion in accounting today, there are two F words here, if you like, that come across an awful lot. One is fear. We talk a lot about the fear in the profession, the fear of change, the fear of digital disruption, what's happening around us and all the rest of it. But actually, the one I want to focus on today is frustration. The number one emotion that I come across with accountants is frustration. Frustrated in their lot, frustrated in their inability to achieve what they want to achieve, frustrated with what's happening around them, with their team, with their clients, with the competition, with the digital disruption that's happening around them. And I asked a question on LinkedIn a few weeks back of accountants. I asked them, as an accountant in practice, what is it that you are most frustrated by? These are the answers that I got. 41% of respondents were most frustrated with themselves. 14% with their team. 36% with the clients, and 9%, only 9% with the tech. So let's just for a moment look at these figures a little bit more. Brian talked yesterday about how accounting firms go about the process of addressing what they perceive to be their problems. And tech was central to that conversation. So Brian talked an awful lot about how firms see an issue in their firm, accountants see an issue in their firm, and therefore dive in to find the tech solution to that. And actually, one of the critical things out of his talk, and this, if you didn't catch his talk yesterday, we can make it available to you. We've had the recordings of the talk, so we can, Dermot will probably pick up on that at the end. But he made the critical point that actually tech itself, we've always tried to hang, particularly in recent years, we've tried to hang our hat on tech when it comes to solving the problems that we have in our firm, without actually spending the time understanding what lies behind it, what problem that are we really trying to solve, and more fundamentally, why it is that we have that problem. So when Brian was talking about that yesterday, and knowing that I was putting these figures up today, I thought that's really interesting, because we do spend as a profession a huge amount of time these days talking about tech, and yet only 1 in 10 accountants see tech as the most frustrating thing in their firm. So are we focusing on the wrong areas from that point of view? And when Brian was talking about what is the why behind the problems, let's look above that bottom line. Let's look above the tech at ourselves, our teams, and our clients, and go, okay, well, are we getting closer to the why if we're looking at those sort of areas there? So only 9%, 1 in 10 accountants see tech as their biggest frustration. Let's move on to the team. So 14% see the team as their greatest frustration. Now, again, I get called into an awful lot of firms because the partners, the directors, want to fix their managers, want to fix their team, want to get their team to step up more, see the inexperience or the lack of skills within their team as one of the reasons why they can't develop new services like coaching or advisory, for instance. They see that same lack of experience and expertise as one of the reasons why they can't exit their own firms. So when you have those conversations, you think, okay, right, well, teams are a big issue within the profession. We all know the challenges that we have with recruitment and retention, for instance. And yet again, when you get to the heart of it and ask the question about what frustrates you the most, it rarely is the team itself. So let's push tech and team to one side for one moment, and let's look at those other two. 36%, 1 in 3 accountants roughly, are most frustrated with their clients. And 41%, getting on for half the profession, if you like, I know I'm rounding the figures up, are most frustrated with themselves. Now, I think there is a link here, because invariably in accounting firms, it is the partners, the directors, who have those closest contacts with the clients. And here we have 77% of the respondents saying that the most frustrating thing is either themselves or their clients. So therefore, that relationship that we have with our clients is that at the heart of the greatest frustrations that we have within our firms. That 41% are the most frustrated with themselves. If they are not getting the results out of that relationship, if they're not getting the rewards and the satisfaction and having the impact in that relationship that they want, is that what's reflecting in that 41%? Is the fact that 1 in 3 accountants are seeing their clients as the problem. And again, when you talk to accountants, one of the things they'll say is, well, I've just got we want to do advisory, but we've got the wrong clients. My clients don't want those sorts of services. We want to get all of our clients onto the cloud, but my clients don't want to do that. We want to provide more value-added services for my clients, but my clients don't want to pay for that. We want to make the firm more efficient, but my clients won't cooperate. They're things that we hear an awful lot. But actually, go back to what I was talking about earlier, if it's our firm and our clients are the problem, then why have we not fixed that? And equally, if we can't fix that, if we do genuinely believe that we've got the wrong clients and the clients are the problem, what have we done about that? Why are they still clients? So what I will do this morning is ask you quite a series of questions about that. I want you to think as much as anything else this morning about that client relationship and how you place that at the heart of a lot of the frustrations that you face. I will talk, we'll go on to this shortly, but I talk to accountants and they will talk to me about a client who is a major problem, who is not doesn't pay their bills, who is not taking the accountant's advice, who is not cooperating them when it comes to sending in information on time, making the changes in the system, all the rest of it. And then you'll say to them, okay, how long has this person been a client? And they'll go, oh, been a client for 15 years. Okay, so why is that? If that person is a problem to your firm, why is it that you haven't addressed that? Why is it that you haven't dealt with it? Why have they been a client and been a problem for so long? And often the answer is because they then flip it round and start to sympathize with the client and start to sympathize with the challenge and recognize the challenges that the clients face. And we're falling back into this thing about, okay, so now we're starting to sacrifice ourselves for the failings of the client. One thing I would strongly recommend all the time when it comes to the decisions that you're making in your firm is to remember whose firm it is. For many of you on this call today, you have took a positive decision to start your own accounting firm. And you will have had lots of reasons for that. You will have been, for many, for instance, you will be working in an existing accounting firm and you just believe there's a better way of doing it. You look at the firm you're working at and go, actually, I wouldn't do it that way. I'd do it a different way. And you reach a point where you go, okay, fine, sod it. I'm going to do it my way and I'll succeed or fail by that. And many of you will have been in that sort of situation. For others, it will have been part of your career path in the first place. You always wanted to have your own firm, and so you took that leap. But when you did it, you always had a very clear mental picture of what your firm was going to look like. And I know over the years, that picture can become clouded, it can become forgotten, it can disappear completely because of the day-to-day stresses, frustrations, challenges that we all face as accountants. What we have to do, if we're going to achieve the vision that we once had, we've got to get back to that. We've got to put that at the heart of our firms. So one of the most important things, I believe, and so the number one lesson that I learned over those 41 years so far, is that your firm has to reflect your vision. There's a danger that, particularly in this day and age, we talk about vision an awful lot. We talk about goals, we talk about objectives. And there's a sense sometimes, I think, that it becomes a bit of management consultancy speak. It's the sort of thing that we should be talking about. But actually, from my own practical experience, once you put your vision at the heart of your firm and your firm reflects that vision, it fundamentally changes the pathway that your firm follows from there on. Vision is not something that we should just talk about. Vision is something that we should live and breathe within our firm. And I'll go on and talk about that shortly. The second area, your firm should run to your rules. What's the point in having your own business if you're running to everybody else's rules? And I'll go on and talk about that as well. But when it comes to the satisfaction that you get from running your firm, if it's not running to your rules, if it's running to somebody else's rules, then you're going to struggle to achieve those levels of satisfaction. And the third one, and this is that responsibility point I put up on the second slide I showed. If you want your firm to change, nobody's going to change it other than you. Now, again, this isn't about working hard. This isn't about coming in the next day and being someone different to who you are today. But it is a hard fact that we have to face up to. If we are going to change our firm, it's got to be us who leads that change. It doesn't have to be us who does it, but it's got to be us who leads it. And I'll talk about that through. So they're the three things that we'll cover this morning. Talking about your vision and why that is important. Talking about the rules of your firm in the widest sense and how you apply those. And talking about recognizing your position and your responsibility when it comes to achieving change within your firm. Let me show you this model. This is the model that we use for an accounting firm today. We're all used to the traditional model of an accounting firm, which was the silo model, where you had the partner at the top and you work your way down through the senior managers, seniors, semi-seniors, juniors. And work came in at the top, went all the way down, came all the way back up and went out again. We know, I think it's generally recognized that these days that model doesn't fit what's required today because it's too process focused for a start off. One of the big failings of the model is the client doesn't appear anywhere in it, and the business has to be all about the client today. But also it's just too rigid. It's work in, work out. Where we're looking to expand our services and where we're looking to build client relationships, it doesn't work within that sort of pillar structure. And of course, if you're trying to grow your firm, by building a series of silos is a very expensive way to do it and doesn't fit with the opportunities and the more flexible working arrangements that we have today. So we work on this model, and those of you who work with us will recognize this very well. At the 3 points of the triangle, we have the 3 core areas of an accounting firm. At the apex there, we have leadership, internal management, and external management. So leadership is your role in your firm. And I pull it out into 3 different steps. One is your vision and values, what your firm is all about, what it means to be to you, what this vision that you had of the culture that you wanted to create. What is that? How clear is that? The second one is the influence that you then have on your firm and how you can better influence those around you, both internally and externally. And the third one is the plan. What plan are you working to? How are you going to achieve that vision? How are you going to build that influence? What is the action plan that you have with your firm? So everything starts with that. You know, whatever we're called into a firm to address, whether it be people, systems and processes, clients, growth, marketing, whatever it may be, the starting point is always to pull it back to leadership, because until that is clear, until those vision and values are clear and can be communicated, until you are influencing and having the most positive impact on your firm, and until you have a clear plan, everything else is going to be a struggle. Then you would look at the internals of the firm. So the team, their roles, the responsibilities, the structure of that team, and how they engage with that vision. Your production processes and your systems of communication. Production processes fundamentally is something that accountants are good at. It's because we've always needed to be good at it. We can always be better. And of course, with digitalization, we have those opportunities now. But production, although it tends to attract an awful lot of time and focus, is rarely the biggest problem in the firm. And then communication. Communication in whatever business you go into can always be better. And it needs some focused thought to improve that. But again, it's an area that generally businesses will recognize and try to be better at. But once you've sorted your leadership out, once you've sorted your internal management out, then we have the externals. So the brand of the firm, the client relationships, the client experience, and your marketing, the growth strategies. Now, again, when you're looking at accounting firms, quite often if a firm is trying to get better, is trying to improve its performance, what it will seek to do is to bring in more clients. And so they will leap straight to number 9 there, straight to step 9 in the process. How do we get more clients? When in fact, if your internals aren't working effectively, if your leadership isn't clear, then the last thing you want is more clients, because more clients will mean more problems. So they're the 9 steps to focus on the firm. And that's what's happening in those 3 corners. What's as important, if not more important, is how those 3 elements are then communicated to each other. So how that vision and the values and the plan is communicated internally and externally, how the internal operations of the firm link with the externals, and essentially how your team link with your clients, and vice versa. Get all of that right, and you build a culture which reflects that vision and those values. Once you've established the culture of your firm right, then you're in a position where all of these things that we talk about, the satisfaction, the rewards, the impact that you want to have, that's when you get it right. That's the moment when you walk into your office and go, got it. This is how it was supposed to be. This is what I imagined. This is what I dreamt of. So it doesn't happen by achieving any one of those individual steps. It happens by building those together and keeping the strength of that triangle together and allowing the culture to build as a whole. But you'll notice the critical thing there is leadership at the top, and that's what we can't get away from. But that's the bit that we sacrifice because we sacrifice our vision and our values, we sacrifice our influence, and we sacrifice our plan because we spend all of our time trying to fix what's happening typically in 5 and typically in 9. So let's focus now on this top point. So I said right at the outset, the firm should reflect your vision. What do I mean by that? Well, when I talk about a vision, I'm talking about the things that matter most to you. So the vision that you had for your firm, you wanted a firm not so much focused here on, I want a firm with 100 staff and 5 offices and 25 million turnover, whatever it may be, or I want to start a firm with 500,000 turnover and 6 staff, and not so much the numbers, but the firm that you wanted to, the sense of that firm. So a big driver for me has always been to positively influence others, whether it be SME clients or nowadays accountants. And I never really thought too much about why that was until, probably until we got to the point where we got that final firm together. I grew up in a mining village. My parents had a corner shop. So I grew up in an environment of an SME business and customer service. I just did. From the age of 4, I served in the shop, which you probably wouldn't get away with these days, but you could do back then. I didn't get paid for it, mine. And when I looked back, when I became an accountant, I didn't intend to become an accountant. I wanted to go into river management, but turned out it wasn't a proper job in them days. And so I came into accountancy because I looked at all these brochures of all these accountants out there in the field with their clients, talking to clients. And I thought, that looks a great job. That looks really interesting to me. Of course, I then spent the next 5 years ticking up bank statements and what have you, but I stuck to that aim of, I want to be working with the people in their businesses. And I never really gave too much thought as to why. I just did. And then in recent years, I looked back and I thought, well, hang on, this connects here. This goes back to my childhood growing up, and I saw how tough it was for my parents. I saw how hard they worked to build relationships with everybody else in the village. We were central to what was happening with people's lives. Okay, so maybe that's, I get what it's like to live in an SME family, and I know how hard it can be. Maybe that's been my driver for over the years, wanting to work with so many SME clients. Of course, when we then sold the accounting firm and I started working with accountants, the leap was much easier because having been an accountant for so long, I just got it. The frustrations, the stresses, the pressures, the things that you want to achieve and can't achieve, I just understood what that was all about. And that's why so many accountants are just nice people not getting the rewards. And I wanted to do something about that. And of course, you get a double benefit, because if you can improve the performance of the accountant and their happiness and satisfaction, in turn, you're improving the rewards that their SME clients are getting. So understanding what my vision is about became really important, because if I can't express that to my team, if I can't express that to the clients, how do I attract the right clients? It's okay being frustrated with our clients, but if we brought the wrong clients in the first place because we've just sold ourselves on fees or the fact that we do the best sets of accounts or whatever it may be, then how are we going to attract the right clients? Is that where the frustration is coming from? Because we've not made it clear in the first place what we're all about. The same with our team. How do we attract the right team if they don't understand who they're working for? If they don't understand what we're trying to achieve? How can they buy into that? Now, some people won't like it. That's fine. There's plenty of other job opportunities for them. There's plenty of other accountants to go and work for and to use as your accountant. We want the right people. We want clients who engage with the same vision. We want team members who engage with the same vision. And they can't do that if we're not clear on what that vision is. If we're not clear on who we are and what we're about, how can we attract the right clients, the right team? How can our firm feel right when we walk in on a Monday morning if we've not made it clear what right feels like? Again, how formal do we want to be? How informal do we want to be? What sort of engagement do we want from our team? And how do we know, how do we achieve the right outcomes if we've not set out what those outcomes should be? And again, I'm not talking numbers here. I'm not talking about our turnover targets, profit targets, cash flow targets, client gains, and all the rest of it. That matters. But I'm talking about, no, what does good look like? What does success look like when it comes to our firm? Is it important to us that clients walk in with a smile? It's important to us that clients walk out with a smile. It's important that team smiles happen. But do these things matter? And if they do, we need to be communicating these sorts of points. So your firm should reflect your vision. Think very much about the brand that you currently show to the world. Think very much about the firm that you currently present to the world. How accurately does it reflect your vision, your values, your beliefs, your passions, the world that you want to build? Because if it doesn't, change it. Change it. Look at your website, look at your offices, look at your team, look at the services that you offer and go, hang on, no, this isn't me. What I'm doing is I'm building an accounting firm that could tick anyone's boxes. I want an accounting firm that ticks my boxes. That's what will make me happy. That's why your vision is so important. The second bit links in with that, and this is that the firm should run to your rules. Go with me on this one. You'll note there's an asterisk, so I'll put at the end. So first of all, do what you want to do with your firm. This is the best piece of advice I can ever give any accountant. Do what you want to do, not what you think you should be doing. Do what you want to do. Do it the way that you want to do it. Most importantly, work with the people who you want to work with. We have this habit of accepting any sort of client. We have this habit of recruiting, particularly in this day and age, recruiting any sort of employee. It's your firm. You should go in and look forward to the people that you're going to be working with. If you don't, do something about it. And achieve your version of success. This is a big thing for me because there's lots of people like me who tell accountants, what things should look like, what you should do, and all the rest of it. And we have this view that, so you haven't got £1 million practice yet. Well, you're not very good, are you? Or you haven't got so many staff yet, or so many clients yet. Your version of success will be different to absolutely everybody else's. I never wanted a huge firm. Fundamentally, I'm lazy. The last thing I want is to be rushing around every day sorting out masses of problems. I wanted something that made me happy, and that we ultimately, in the different models of firms that we had, the first firm that we did, we grew very successfully and very rapidly, but it ended up as a monster. It was far too big. We couldn't control it. We ended up merging it with another firm. It lost the satisfaction that we had in the early days. When we came away from that 3 years later and created our own firm, the first rule was, right, what are we going to do? What sort of firm do we want? And we said, well, fundamentally, we want a firm that we're happy with. Right, let's just do things that make us happy, and let's see where that takes us. Remember, success is an outcome in the same way that profit is an outcome, cash flow is an outcome. So your version of success will be different to everybody else's. Don't let anybody else ever tell you that your version of success and your vision of success is wrong. Here's my asterisk, and I'll put it within reason. So do what you want. We have professional guidelines, we have ethics, we have rules, we have laws. I'm not saying we ignore those. But what I'm saying is that within that context, you can do whatever you want to do. If you don't want to do advisory, don't do advisory. If you want to grow compliance to the nth degree, grow compliance to the nth degree. If you only want to work with firms that start with the letter A, great. Just work with firms that start with that. Do whatever you want to do. These are some of the things that we applied when we had our own firm. Starting point was this. You'd sit down with the client, rather than go, what can we do for you? You would sit down with the client and go, okay, this is who we are. This is how we work. Does that work for you? If it doesn't, that is absolutely fine. It probably means that we're not the best sort of accountants for you. I can recommend somebody else. If it does work for you, that's brilliant. But let's stop trying to, we tend to get a client in, the client says, I want this, 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 and this. And you go, yeah, we can do that. Immediately, the client's establishing a master-servant relationship. And that's where it starts to go wrong. This was questioned very early on in every new client meeting. If you're looking for the cheapest firm around, then it's not going to be us. So if that's what matters to you the most, unfortunately, that won't be us. We won't be the cheapest. I can recommend these guys, and we'd send them down the street. Followed very quickly by this question. What matters to you the most? Paying the least amount of tax or building a better business? Clients would sometimes find that a strange question to answer, but the point I'm making is this. Fundamentally, we were not a tax practice. Tax was not our biggest driver. As I said earlier, our biggest driver was making a difference for SME businesses. So if that's the big thing for them, if they want to build a better business, if they want to have a better life, yes, of course, we will work with them to reduce their tax. But if the single most important thing for them was to save tax, we probably weren't the best firm for them. It's not what our driver was. If they want help, if they want to build a better business, we're the guys for them. So let's get that right from the outset. And if they want tax, that's fine. There was a great tax practice in town. We used to send them down to them. We'd also be clear, farmers, property developers, GPs, schools, charities, tax zone cases, don't get them. Yes, we had a farmer client. Yes, we had the odd property developer. Yes, we had the odd school and charity. But we didn't drive that sort of business because we didn't relate to it. And if we can't relate to it, we're not going to be good at it and we're not going to be passionate about it. So understand again, if we'd attracted all of these people as clients, we'd have been sitting there moaning that we haven't got the right clients. Or whose fault's that? So get it clear from the outset. Work to your own rules because that's okay. And this, the golden rule, we only work with people who we are happy to work with and where there is mutual respect. The most important thing I ever learned is what we apply fundamentally in business all day, every day. If I'm happy working, for some bizarre reason, I'm happy working with Dermot. So it works. And there is a mutual respect there. But it's not about the size of the client. It's not about their turnover. It's not about the profit that they make. It's not about the services. It's about, can we sit down with that client and be happy in that conversation? With our team members, it's actually not about their experience. It's not about what's on their CV. It's about, do we get them? Do they get us? Are these people who we can work together with? Because if they are, we're going to build the right team. If they are, we're going to build the right client base. If they're not, it's our fault because we've not made it clear. Remember, as the accountant, you're the person who makes the decision on who works for you. You're the person who makes the decision on what clients you take on board. So if it's wrong, it's your fault. Run to your rules. Succeed or fail by doing things the way you want to. That's why you set up your firms in the first place. We need to stop trying to work in boxes. Stop trying to do what we think an accountant should do and what an accountant looks like. Yeah, if you want to have a service in your firm that supplies specialist coffees to your clients, great, go and do it. Yeah, particularly if you're an expert in specialist coffees. I only say that because Dermot and I were talking about coffees earlier. Here's another example of it. So this is what we call client segmentation. So this is where you start to stamp your control over on the client relationship rather vice versa, but why it's the right way around. So two dividers here. The vertical axis is the quality of the relationship. So if you're above that line, then the quality of the relationship is better and better and better. Below the line, it doesn't work. And the horizontal axis, the level of financial return. So again, to the right of that line, you're happy with the financial return. Doesn't mean to say it's necessarily profitable, but you're happy with the financial return. To the left of that line, you're not. So we have four types of clients fundamentally. Your A clients, your best clients, the cream of the crop. The clients where you're happy with the relationship and you're happy with the financial return that you get. You have your B clients, which I would typically call your normal clients, where nice people, happy to work with them, but they don't yet spend enough money with you. And then we have these guys, the C clients and the D clients. The C clients where you're getting a good financial return, but you do not enjoy working with them. They're a pain in the neck. They're bullies. They don't follow your advice. They're forever leaving things late. They upset your team. And the D clients, you'd wonder if there are any D clients in any firm, but they're in every firm. So you don't like them. They don't like you and you don't make any money from them. But bizarrely, they're still in your firm. So you segment your clients and you act upon it. So your A clients are the ones who clearly you should be spending all of your time with. What happens at the moment is the C clients and the D clients shout loudest and demand the time of you and your team, and you get distracted from your best clients, your A clients. Your B clients, we want to move those along that line so that you're making more money from them. Now, a lot of this is down then to systemizing the process, to getting your team more engaged in working with the B clients. But once we've identified those B clients, we know that we can actually, if we actively manage those relationships the way that we want them to work, rather than letting the client dictate, we can make those better relationships. C clients have to be dealt with. A C client needs a conversation that says, look, this isn't working. It doesn't work for us. What are we going to do about it? The C clients who want to keep you as their accountant and are prepared to work at it can become A clients if we fix those problems. And the problems could be two-way. If they don't, they're very quickly a D client. And D clients go one way, which is out your firm. Your firm cannot continue having D clients. Get rid of them. Sell them, sack them, price them out of the market, whatever you do. Your team will be uplifted every time you get rid of a D client. But rather than treat all of our clients the same and get frustrated that that's what we're doing, focus on the different sort of clients that you have, manage them accordingly. And thirdly, this point about who else is going to change things. We've shown from that diagram, vision comes from the top, direction comes from the top, culture builds from the top, which means you. What it doesn't mean is that you're the person who's got to do it, because the results will come from the team and from the systems. So you have not got to be the person who's juggling everything, which is probably what's happening at the moment. So certainly you have that sense of it. You don't have to be that person. Brian pulled out a couple of things yesterday. First of all, he showed the classic Simon Sinek video that I'm sure most of you have seen. Sinek makes that point that people don't buy what you do, they buy why you do it. So if they don't understand why you do it, how can you attract those right sort of sales? How can you attract those right time comms? And Brian made the point, strategy is the why. Operations is the how. And if we go back to that diagram, strategy comes from you. Vision and values comes from you. Influence comes from you. Plan comes from you. If you get that bit right, you're then driving what's happening in both the internal management and the external management. You've got a team that better understand what's expected of them, can better engage in the process. You've got clients who better understand the relationship with their accountant and can engage in that process. So rather than getting stressed out, because what we tend to do is we look at all of these points, we take all those 9 steps and all of the tens or hundreds of challenges that are in each one of those steps and go, where the hell do I start? When actually, if you look at that diagram, you always start in the same place. And that's the best thing about it. You start with you. Am I clear? Am I clear in my vision and my values? Am I influencing people as positively as I could be doing? Do I have a clear plan? And am I communicating that on a regular basis? Because that's how you start to build the culture that's going to attract the right clients and the right team members. All about you. I'll close with this. Many of you know this is my favorite quote of all time. That's a very young looking Barack Obama these days. Change will not come if we wait for some other person or some other time. We are the ones we've been waiting for. We are the change that we seek. If your firm is going to change, you're the person who's going to drive that change. You're not the person who has to do it all, but you are going to be leading it from the front in terms of your vision, your rules, and you taking responsibility for driving that change. That's me done. That's me sorted. If you have any questions or comments, by all means, ask them away now. Or if not, we can pick it up. We'll give you have our contact details. You'll be able to get hold of me as well anyway. But the overriding thing for me in this is that it is okay to put yourself at the center of your firm and to have the firm revolve around you. If you are a genuine person, and you will be, it's one of the reasons why you're on this call, you genuinely want to help your clients, you will not do things that are bad for your clients and bad for your team. And because of that, it's okay for you to put yourself at the heart of it and say, this is how I want things to work. This is what works for me. And as importantly, this is what doesn't work for me. So therefore, that's the sort of firm that we are. If you love that, brilliant. If you don't love it, that's equally brilliant, because we now know that you're better off with another firm of accountants. Over to you, Dermot.
Thank you very much. Yeah, so if anybody's got any questions, then please feel free to contribute through the Q&A box, which you can see at the bottom of your screen. I'm sure you're all Zoom experts now. So Q&A at the bottom of the menu below Richard, as you can see him on the screen. So I'll start off with one question. So you talked about D clients on your kind of 4 grids of clients, the A, B, C, D, and the opportunity that you have, to move people or get rid of them. So if we focus on D clients in particular, then what's the actual way that you should, go about this? What's the best way to actually pull those people in? The BMWs, as they're referred to, the bitches, moaners, whingers. What's the best way to say thank you very much, but you're not for us?
The starting point is to identify them. So to create your list of D clients and involve your team in that process, because you won't necessarily know who those D clients are, because obviously from the point of view of the leader of the firm, you see your clients and you see the profit or losses that you make on those clients. You don't necessarily hear and see all of the conversations that your team members have from them. So engage your team in that process as well. The whole thing, when you're segmenting your clients, and don't overthink it. Sit down with your client list and go, right, that's an A, that's a B, that's a B, that's a D, that's a G, because your heart will tell you what they are. And engage your team in that. So first of all, identify them. Then you have a list of 10, 20, 30, 50 D clients, and we're going, right, at some point we are getting rid of these people because they just don't fit our firm. I'm very aware that there is a financial implication here, because even though these people don't fit, they're still putting some money into the firm each year. So let's not cut our nose off. But you've then got a number of options. One is to package them all up and sell them. And I've known a number of firms do this, because whilst they may be D clients to you, they could be B clients to another firm. It's back to this vision and culture thing. They don't fit your vision culture, but they could comfortably be a good client for another firm. So one thing to do is to package them up, sell them, and you've got 20, 30, 40, 50,000 pounds worth of cash coming in straight away. And that does work. Another option is to go, okay, right, well, we're just going to bite the bullet. We're going to get rid of them straight away. So we're either going to write to them and go, unfortunately, it's not you, it's us. You're not us. We're not the right accountant for you, and we recommend that you go to these other firms. Or indeed, we're going to wrap it up. That's got a pretty instant cash hit for you. And my advice would be that it's better to time that, to go, okay, we are going to get rid of them, but let's tell you what. We just work on their accounts at the moment. Let's get those accounts done. Let's get that final bill paid. Then we'll get rid. And that might then take a few months, up to 12 months, to get rid of all of them. But you've got the satisfaction of knowing that they're on the way out. What I would also say is that it's quite nice to sort of reward yourself. So I know a number of firms, for instance, where they create that D list, and every time they win a good client, they go, great, let's have the double benefit by getting rid of a D at the same time. So we've just picked up an A client. That means we can get rid of 3 or 4 Ds. Just shoot them off. So we'll identify, sit down with the team, go, right, who should we get rid of this week? Everyone has conversations, goes, right, let's get rid of those 4 BMWs, as Dermot says, and they're gone. So you've got the double benefit, a new client coming in and getting rid of as well. As long as you've identified who they are in the first place, then you're in this situation where you go, okay, well, over a period of time, we can get rid of them. C's are slightly different because it's a bigger financial impact on you. So that's why with C's, I would always say it's a conversation. What I tend to find with C clients is that often they're fine with the boss. Thinking in my own firm, I can think of a number of C clients who with me, they're fine because they're the boss and I'm the boss and they like dealing with bosses, and that's great. But they treated my team the same way they treated their own staff. And I remember one particular case where I came down and our receptionist was in tears because the way they've been spoken to by a client. And that's just not happening. So I would sat down with the client and said, look, I get that you're stressed. The team understand that you're stressed, but that is not acceptable. So now, in this case, this client recognized they're wrong, put it right, sent some flowers to the receptionist. We got over the problem. Other times we've sat down and it's been an ongoing problem. They've not been listening. And we've said, look, this just doesn't, I know you and I get on fine, but this does not work for me. I cannot have you upsetting my team. So either we fix this or we're going to have to say goodbye. And if they go, I don't care, your staff should do as they're told, fine, we're saying goodbye because that doesn't fit in with my vision, my culture. If they go, well, look, actually, part of the problem is that my team always phone me on, you guys always phone me on a Thursday, and Thursday's my busiest day. I'm going, okay, right, well, that's our fault then. We should have known that. I'll get the team to phone you on a different day. when suits you. Don't phone a farmer when it's harvesting time. Don't get frustrated if he doesn't get back to you because they're busy. So sometimes with the C client, you have a client, you can fix the problem, which makes them a great client. Then they can become an A client. If they refuse to fix, well, they're going to go because it doesn't fit your vision, doesn't fit your culture. So D's just get rid, create the list, just decide over a period of time they're going to go. C clients warrant a conversation because it could be something that you can fix, but you've still got to stick to your guns. It's okay for us to sit down with any client and go, look, this doesn't work for me. I want to have a conversation with about it and to explain why it doesn't work. Sometimes I've sat down with clients and done that client segmentation and gone, look, let me show you, this is a great thing you can do with your customers. And they go through and they go, oh, that's really good. That's really great. And then you go, actually, we do it within our own firm as well. Because they can't help but go, oh, really? Where would you put me on that graph? Well, funny you should mention that, because right now we've got you here. Let's talk about why that is. So it's just a mechanism for getting clients to understand this is not a master-servant relationship. We are paid to advise them. We are paid to support them. If they will not let us do that, if they will not let us support them because they don't cooperate, if they will not take our advice, we're entitled to sit down and go, this isn't working. What's the point? If they don't pay us for our time, we're entitled to sit down and go, look, we need to change this because I'm running the business like you're running the business. If they are a decent person, if they're a nice person, if they're above the line, they will want you to make a profit. They get it. But if we don't take control of the relationship, they will be quite happy to dump their problems on us, to not pay for stuff. We will all do the same. If we've all got different responsibilities, and if no one's going to force them on us, if Dermot was happy to do my tax return each year, I would quite happily let him do my tax return each year because I don't want to do it. But if Dermot turns to me and said, right, okay, I'm going to charge you 250 quid to do your tax return, he said, oh, okay, fine. Well, if you must, you must, but I do want to get it done. But if he just shuts up and doesn't do it, I'll let him do my tax return quite happily. That'd probably be a mistake on my part, but there you go.
Yeah. Last person to go anywhere near any tax, bookkeeping or accounts, practical solutions. So that's great. Does anyone from the floor have any queries, questions that they want to ask? I did. Okay, let me ask one more. Going back to your very nice triangle, just around the effectively the culture, but the three sections where the three peaks were kind of leadership, internal, external. You talked about people getting stuck in the weeds around 5 and 9.
Yeah.
Just for clarity, because you kind of moved off the slide as soon as you said 9. Was 9 marketing?
Yeah, 9 essentially is getting new clients. So we focus, and I'm not saying that we shouldn't have an awareness of how we're going to get new clients, and I'm certainly not saying we should have an awareness of how we become more efficient as our production, but we tend to, like Brian was saying yesterday, we focus on the problem without taking a step back and working out why ahead of that. And so this issue of we're struggling for cash flow, therefore we need to go and get 50 new clients.
Yeah.
Well, actually, is the number of the clients you've got the reason why you're struggling for cash flow? Because the chances are it isn't. It will be linked to other things that are going on with your firm. So therefore, if you bring in a load more clients, you're potentially going to add to the problem because you're going to have to bring in another member of staff to deal with them. You're going to increase your costs straight away. But if you've not fixed the reasons why you've got cash flow problems, it's just going to get worse. So it's instead of just diving into the obvious, let's fix production by bringing in some tech. Let's fix clients, our cash flow by bringing in some new clients. Actually, is that your problem? We need to go back. So go back to that vision, go back to that plan. What isn't working? Let's understand that, because the solution is probably going to be something very different to what you thought it was going to be.
Super. Okay. That's fantastic. Thanks very much, Richard, for that. What I suggest we do is have actually a quick 5 minutes to grab a cup of tea. And then we will come back and obviously have the second presentation of the morning. So if we reconvene about 10:05, then we'll kick on with speech number 2. But thanks, Richard. Great speech. Some quite interesting thoughts there, and appreciate that. So see you all in 5 minutes.